IDEA Global is concerned that the market continues to underestimate the prospect that the Federal Reserve will taper in September. We've certainly seen a quite noticeable reaction in emerging markets, but if you contrast that with performance in Eurodollar, we've seen just choppy range trading so far. However, we would view the most recent move in Eurodollar as the beginning of a trend reversal. We can see scope for a move down to 130 next week and then ultimately down to 126 on a multi-month basis. What's happening is that the market has really looked at the euro through the summer months and felt that it was a relative safe haven both against DM and against Fed tapering. The latter because basically during 10 and 11 people didn't invest in Europe during the European crisis and invested elsewhere in the world, and so we're effectively long EM and US risk against being short and underweight Europe. That's unlikely to last, however. Fed tapering is important, and in conjunction with that you've got ECB balance sheet restriction. Overall, this is likely to mean that liquidity is going to be more difficult going forward, and in this environment we think that European risk can turn out to be somewhat more shaky than currently. It could also increase sensitivity to events in Europe. Against this backdrop, the Fed tapering story will keep coming, and is more than likely to arrive at the September FOMC meeting. This is enough, we think, to trigger a rethink in terms of Eurodollar, and we look for 126 on a multi-month basis. This is Mike Gallagher from IDEA Global.